Welcome to the monthly market report. My name is Allan Ostler with Ask Realty Pro, and for the next 20 minutes or so, I'm going to walk through some of the latest information that's kind of taken place in the residential housing market. This is more of a national approach, and then at the end of this video, I'll go through some of the local market report. And the reason why I put this out there is so that I can get you the most educated information and be your advisor when it comes to purchasing or selling real estate. So my hope is that you'll use this information to educate friends, family, get the message out there that the things that are truly happening in the market across the country are maybe being misconstrued a little bit. So let me first share a slide with you here. This is a showing time graphic here that goes all the way back to January. I use showing time as a leading indicator in real estate to kind of show what's happening in activity, like recent up-to-date, like today activity. So if you go all the way back to January, you'll see a dip down here, a lockdown at the pandemic. Businesses were kind of shut down, and so activity slowed down. And then this year, we're in at the end of 2020, we see a lot more action, and then into 2021, we start to level out. So here, if you look at the showing time graphic, you can see that we're ahead of where we were last year, and you can kind of see that if you follow these graphs, I've kind of put an average here of on the yellow line that kind of shows that we're still above where we were last year. So really, why is this important is because we're hearing a lot of people talking about how we're having a slowdown and that we're leveling off, or that we're starting to plateau. So what we want to do is look at this and say, yeah, well, that is happening, but if you look at it, it's only relative to 2020. So what I'm trying to do is bring you the perspective that if you look at this showing time data going all the way back to even 2017, I mean, what do you see there? You see 2017, 18, 19, that they're probably the most normal markets that we can look at. And then in 2020, we had a surge, but certainly not a normal market. And then we've kind of come off in 2021 where we were in 2020 compared to where we were last time, but it's still well ahead of where we were way back during the years, especially coming into 2020. So that's important. And why? Because yeah, we're starting to see the market level off a little bit there, but our normalized, I guess normalized is a better word, but it's still well ahead of where we were coming into the pandemic. So very, very important. It's important because maybe we're starting to think that transactions are slowing down, or we talk to friends and family or around the office about kind of what's happening in the market. And no doubt that there is a slowing in every market across the country, and that's because there's been a slowdown or a depletion of inventory. And so there's obviously more buyers than sellers. And what we really want to see is more and more inventory come onto the market. Here, let me give you a little bit of perspective. Bill McBride, he calculates risk in the housing market, and he said sales non-seasonally adjusted in September were 548,000. That was 2.7% below sales in September of 2020, which was 563,000. So excluding last September, that distorted, well, excluding last September, which was obviously distorted by the delay in the selling season, the sales were still the strongest since 2005. So you can kind of see that we're still in a very strong marketplace. Let me ask you a question here. Do you hear anybody that's talking about the housing market really talking about the fact that sales are really, really good in comparison? I mean, maybe there's a few, but certainly there's not a lot. And you're certainly not hearing that in the media. So it's my job to kind of educate you what's going on, because I want to serve you and make the information abundant and out there so that you're not scared by the headlines that are in the marketplace. So headlines do a lot more to terrify than they actually do to clarify. So they don't really tell you the clear facts of real estate in our marketplace. So a lot of times what happens is you get factual articles or true articles, but they have like very in-depth clickbait headlines. And so you'll read the headline and you'll make an assumption based off of it, but you don't read the article, and then you maybe tell other people about what you saw and you didn't really get into the matter of the article. So I don't want you to be misinformed. So what I want to do here is give you a couple examples of articles that have been floating around right now. For example, this one right here, foreclosures are shooting up. And you can see it says, is it a repeat of the early 2000s housing crisis? So now this is kind of a headline that I think that we can expect to see more of, but it's definitely not going to be a massive increase like we saw way back in 2008. I mean, just last month, Adam Data came out and said that we had a 49% increase in housing prices. But over the last year, you can still see that's way, way lower than where we were even back in 2020 or even back to 2019. So, yeah, so realtor.com was the one that said that, and in my business, that's more of like a friendly platform that I wouldn't be one that would confuse the customer, but that came from realtor.com. So, but you know, certainly there's going to be people in to next year that are going to be affected by COVID and by the pandemic and might face foreclosure. So I guess the best thing to say is this kind of headline in foreclosures is not exactly accurate. So, all right, so just be aware. You don't need to be concerned of what's going on. It's all relative. It's in perspective. So, CNBC said that mortgage originations will drop 33% in 2022 as interest rates rise, according to the industry forecast. Well, what they don't do is they don't take the time to read into the article about some of the details. So let me bring that up real quick. So if you go into the article, what they actually say is that they're talking about refinance originations will drop 62% in 2022 to 860 billion in 2022, that is. So, I mean, that makes sense because in a rising interest rate environment, we're going to see less originations and more refinances. Okay, though, but however, mortgage originations for the purpose of buying a home are forecast to rise 9% to a record of 1.73 trillion in 2022. So they didn't really do anything to inform the buyer as to what was really going on or to lead them down the right path. So over and over again, you see people that kind of fall victim to these articles that they're seeing. And they're thinking, oh, well, I don't know if now's a good time to buy. It's not a good time to move forward. So I guess the best thing for me to say is my job again is to kind of educate you and what's kind of going out there, and so I'm going to try and make these monthly market reports into the future so that you can get the information that you can use to make the correct decisions. All right. So I bring this slide in. It was a University of Michigan sentiment survey that asked, do you think now is a good time to buy a house? So if we look February of 2020, we see that 70% of the people say yes, it's a good time to buy a home. But then you move forward to September 2020 and you see a little bit less, not terrible, but a little bit less. And then you move to today, and then September of 2021, about 1 out of 3 people think it's a good time to buy, so 32%. One of those reasons is because, again, people have been misinformed as to what's happening in real estate. So there's no doubt there's buyers that are frustrated right now. There's buyers that are looking at prices moving way higher without them, or that they're too high. But yet, if you follow the monthly market report that I'm going to talk about here in just a moment, based on projections for next year, you can see that that's not exactly the case. And that depreciation going into next year is going to be it's going to happen. So I just want to get that message out there, and here I'll talk about it shortly. All right, so what's ahead in the 2022 market forecast? So what's really happening in the market? Because as you know, from what we were talking about earlier, there's a lot of confusion that are bringing out headlines that are terrifying, and they're not really clarifying what's really going on out there. So you see these rising prices, you see rising interest rates, and then you start fearing that the bubble is going to burst, and then all these different concerns that are going on out in the marketplace, and that there might be this market crash. So what I want to do is I want to share the data that shows exactly what's happening so that you can really separate yourself from the noise and help you make the correct decisions. So I don't want you to fall victim to the noise and the confusion, because that'll just put you on the sidelines and make it so that you're just going to wait, wondering how long all this price appreciation is going to continue to head up. And so that's why I wanted to share with you the 2022 forecast, and then a little bit later we'll go into the local information. So anyways, 2022, let's look at this quote here by Doug Duncan, the chief economist for Fannie Mae. So it says, right now we forecast mortgage rates to average 3.3% in 2022, which, though slightly higher than 2020 and 2021, by historical standards remains extremely low and supportive of mortgage demand and affordability. So what does that mean? So just like the other experts are projecting an increase in the market, as the mortgage rates rise, we're going to see that the cost of buying a house will increase along with that. So as mortgage interest rates are projected to rise, it's going to cost more. But the part that I like about this quote is the piece that's in blue that says, by historical standards, it remains extremely low. So even though interest rates ticked up a little bit, they're still going to remain historically low based on projections. So that will support the affordability. What we want to have you understand is that it's important to buy before the mortgage rates go higher. So if you look here at, with Freddie Mac, you can see interest rates going back all the way to 2018. And you can see that in 2018, they were roughly over 5%, and then they've dropped significantly since then. We kind of hit that all-time low right at the very end of last year, early this year, and then it started to tick up again. And so what people want to know is, where are they headed? So Freddie Mac is projecting mortgage rates to rise roughly to about 3.6% into next year. And how we got to that average is we found each of the major players, Fannie, Freddie, MBA, and etc., and we averaged out the difference between what they all thought into 2022 next year. So as mortgage rates go up, yes, it does become expensive to own a home. So if you are thinking of waiting a year, 2 years, maybe even 3, the important thing to know is that you want to buy now before the interest rates rise, because that's mission critical that you do it before the interest rates rise, because your costs are going to go up. So into next year, the home price are expected to increase into next year as well. So what we're looking at is a home price forecast for 2022. And as you look at those, you can see that we have some major players, some industry experts that are projecting about all right, sorry, I skipped ahead too many slides there. So basically, into 2022, we're still having experts say that we're going to have about a 5% home price increase. And that's still because we're having a lower supply of homes than what the market would require to absorb it. And then also we're probably going to still have some of those issues of the pandemic. And then we're going to have people that were reluctant to sell their homes, that we're going to hold off, maybe bring some of that those homes to market. And so that's going to increase inventory, which is going to bring down the amount of home appreciation. But it's still going to continue to rise because of the inventory situation altogether is not going to bring the inventory levels back to what they were, which is an equilibrium in the marketplace. So, of course, again, it's still a good time to buy to maintain affordability before home prices go up, before interest rates go up. But that's for the buyer side of things. But for sellers, it means that the home equity will continue rising, and that's a huge factor. And we've talked about record-breaking equity over the past year, and that equity is going to continue to rise as the home prices rise. So what we want to make sure is that homeowners know that if you're thinking about making that move or making that move 2-3 years down the road, or maybe even next year, that doing that before prices rise will help you leverage the equity, maybe make that move up or downsize, whatever is the thing that you're looking for, where you can kind of still lock in that low rate and take advantage of the current home price appreciation and maybe do a mortgage refinance sort of thing. So yeah, there's a lot that's going to happen here into 2022. So as we think about mortgage rates rising, prices rising, what does that mean for home sales next year? Well, home sales are forecasted to increase and perform well again into 2022. So again, 2022 should be another strong year for the housing market. So 2022 has the potential to be a really great year, and I hope that you can kind of count me as a trusted advisor in the marketplace so that you can understand the power of what's available today and buying before prices and rates rise, so that you can really make that move up, that maybe that downsize or whatever it is, before the end of 2022. So that's kind of what I wanted to express in this. And as we look into next year, I kind of want to help you understand that there's still a strong demand out there for home ownership, and the buyers are proving that no matter how low the inventory, they're willing to pay for the opportunity to purchase. Kind of what I relate it to is, if when you go to Disney World, you want to get to the front of the line, then you're going to have to pay a little extra, and you can get the VIP pass and bump to the front of the line. So kind of what we're experiencing is buyers, their want for homeownership is so elevated that they're willing to pay a little extra so they can bump the line, which in turn drives up the home prices, and sellers are seeing this happen, which makes it a very competitive marketplace still. And I think that before interest rates rise and the appreciation decelerates, you can see a lot of positioning towards the end of this year in December to close out 2021, and a reset of activity into 2022, which will spark the increase in the market again. Maybe not at the high appreciation levels that we saw in the past, but if you go back a few slides, you can see that it was approximately 5% into 2022. So I hope that helps. So this video is getting a little longer than what I thought, so I'm going to make a separate video explaining some of the numbers that we saw in our local markets here. We've been talking about this on a national level, and I want to bring you more specifics on what's going on locally. But the national level statistics and kind of the sentiment is something that we do want to pay attention to. And I hope this helps you into the future understand and make educated, informed decisions. So this is Allan Ostler with Ask Realty Pro signing off. And if you have any questions or anything that you would like to see from me in the way of properties, or well, maybe not so much properties, but anything that you need in the world, just give me a ring. I'm here to help. I just want to make sure that you're taken care of. So again, thanks. Bye.